A lot of people have sort of held off for a long time. Our tight rental market's made it hard for people to change over properties as well. Where do you think we're at in the current cycle? On that rental side, how are things looking for the Perth rental market? What vacancy rate typically goes with prices stabilizing and prices increasing? What benchmarks have you used?
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
G'day, Tim. Thanks so much for coming back on the show. Really excited to finish the year with your insights, and they're always very valuable. So thanks for joining us.
Many thanks, Jared. It was good to get the invitation to come back. And I think since last time we chatted, there's been quite a lot of water under the bridge and clearly a bit of inflection in the market. It's not just in Perth, but pretty much everywhere around the country seems to be just losing some momentum, or like in the bigger states and the bigger cities are moving into the early stages of what seems to be a shallow correction at the moment. So yeah, a lot's changing at the moment.
Well, we've got a lot to unpack today, but for those that don't know, Tim, they've probably been living under a rock. Anyone in the property investment world knows of CoreLogic, and you're the executive research director there, and been heavy into your research for decades, and now one of the leading authorities on residential property in Australia. So thanks again for joining us and sharing these insights.
Thanks, Jared. It's a bit of fun as well. And yeah, I've always been drinking from the fountain of property data here at RV Data and then ultimately CoreLogic. So yeah, it's a good place to be.
So tell us, what have you been seeing for Perth, and give us a bit of a recap on the last year.
Yeah, it's still the property market that's leading the nation in terms of price growth. Past 12 months, at least up to the end of October, we saw Perth housing values rise about 23%. So that's not quite a peak rate of annual growth. It looks like the market probably moved through a peak rate of growth around June of this year, June of 2024. And we've just been seeing a little bit of steam coming out of the marketplace. Definitely not seeing values going backwards anywhere around Perth, but yeah, we're starting to see now some signs that listing numbers are picking up off their record lows through spring. Buyer demand just doesn't seem to be quite as strong as what it used to be. But still, yeah, to compare Perth to like an Adelaide or a Brisbane, the other mid-sized capital cities, which are also quite strong, we're still seeing Perth really leading those markets by quite a bit. And I think I'd put that back to still the fact that Perth is a reasonably affordable market, despite the fact that we've seen housing values rise more than 70% over the past 5 years. It's off a really low base. And when we look at things like, say, dwelling value to income ratios to give us a bit of a benchmark for affordability, Perth's definitely risen, but it's kind of middle of the pack now, moving off. Yeah, it was for a long time there, one of the most affordable capital cities, well, the most affordable after Darwin. And now it's kind of middle of the pack with a dwelling value to income ratio that's around 7.5 times. On that note, I think affordability is clearly worsening. That's probably one of the factors that's starting to slow the market. But we're also seeing more listings coming on the market. So it does seem more people are willing to sell, and demand's not quite keeping up to pace, which means there's a bit of an accumulation of supply in the market.
Well, a lot of people have sort of held off and for a long time, and our tight rental market's made it hard for people to sort of change over properties as well. Where do you think we're at in the current cycle?
Well, I don't think we're at the peak. So to put it this way, if 12 o'clock is the peak of the market, and after 12 you'd expect housing prices to be falling. I think we're probably somewhere around 9 or 10 o'clock. So the market's moved through its peak rate of growth and it's slowing down. But I think it's going to be some time before we actually start to see housing values drifting lower across Perth, especially given, yeah, advertised supply levels are rising, but they're still remarkably low. We're seeing listing numbers about 30% below the 5-year average at the moment. As I mentioned, affordability is not too bad across the city. We're seeing strong rates of migration from interstate coming through. That's slowed down a little bit from the pandemic highs, but it's still well above average. And overseas migration slowing down, but again above average. And as you say, Jared, that's kind of flowing through to less rental demand as well. A little bit of breathing room for buyers. But I really can't see housing values starting to trend lower even into next year. I think we'll still see value growth, but just nowhere near as quickly as what we've been seeing through 2024, and or for that matter, all the way back to 2020. the market's been consistently strong.
And is it different segments growing, and where do you see those segments sort of changing in the year ahead?
Well, everywhere is growing, but absolutely, there are definitely patches of much stronger growth, and we're clearly seeing the stronger conditions are skewed towards the more affordable markets now. Like most markets, we tend to see the upper quartile, so your most expensive quarter of the market tends to lead the cycles, and that was clearly the case in Perth with some of your sort of western coastal markets like your Cottesloes and Peppermint Groves, Dalkeiths, Mossman Park, and so forth, all leading the race. But now it's really a story about markets like Wanneroo, getting down to Mandurah, Rockingham, Canning. Those sort of markets are much more appealing to both first home buyers and investors, are really leading the growth stakes. And I think by the way, we're seeing this around the country. It's not just a reflection of Perth's dynamic. Even in the markets that are going backwards now, like Sydney and Melbourne, we're still seeing that lower quartile of the marketplace a little bit more resilient. I think part of this is just simply a deflection of demand. Borrowing capacity is reduced, and we've seen affordability challenges becoming a little bit more challenging. It means if you're on the median household income, it's going to be harder to actually afford to buy the medium priced dwelling, which means your demand is just getting deflected towards those lower price points, as well as the fact that investors have been very active across the market. They generally tend to target that lower quartile as well.
And I'm finding that those that have the equity in the lower end are moving into the middle, and those some of those in the middle are starting to move to the upper. Does it usually ripple all the way through, or can it sort of stop and just hit an affordability ceiling at some point?
Yeah, there's absolutely a ceiling, and I think that's really brought about by just serviceability and credit appetite. So if you think about the fact that we have a cost of living crisis, if you will, so cost of living pressures are very high, so it's quite difficult to demonstrate your serviceability amid high cost of living pressures, as well as the 3 percentage point serviceability buffer, which means you're demonstrating your serviceability against a loan that's probably somewhere up around 9% for mortgage rates. It means that even if you're reasonably high income, you probably aren't going to get approval unless you have a lot of equity behind you or a large deposit to buy into those high-end markets. There's always going to be exceptions, and there's always going to be wealthy folk that can afford to buy into those higher-end markets. And I think long term, they're generally the markets that do tend to outperform simply due to their scarcity value, and they're mostly well established now. There's not a great deal of new supply that's available to come into those markets. But yeah, I think at the moment, it's that the affordability is quite attractive of those more northern and southern markets, as well as probably just more attractive to investors for both a price point and a rental yield perspective.
Well, on that rental side, how are things looking for the Perth rental market?
Yeah, the rental market's definitely slowing. It's still very strong. I had a graph that I was looking at before on Perth rents, and it's clear that the market's moved through an inflection point for rental growth. So we're looking at annual growth for house rents up about 9.4%, which is still extraordinary. Don't get me wrong, it's very high. But if you go back about a year ago, that was tracking at about 13.5 to 15%. The unit market rents are rising about 11% per annum, but slowing from a recent peak of about 17% per annum. So, but what we're seeing, and again, this is happening in most markets, and it seems to be in line with a slowdown in net overseas migration. We know that most overseas migrants are here on generally temporary visas. They tend to rent, so that demand flows directly and immediately into rental demand. So as we see net overseas migration slowing down, it's taking a bit of heat out of rental markets. But I think the other factor in rental markets is simply that affordability constraints are becoming really pressing, and renters don't have a great deal of elasticity in how much they can pay. So once you get above about a third of your income going towards paying rent, renters kind of reach a ceiling, and then you kind of see a forced restructuring of demand, which we can see in things like larger rental households or larger group households are forming, more multi-generational households are forming as well, which tends to de-amplify rental demand as well. So I think it's really a combination of less overseas migration and affordability constraints just driving through this restructuring of demand, which can be seen in larger household sizes.
And we're finding, particularly in those areas where a lot of investors are buying, there's just sort of too many rentals for the demand. And I don't know if you can speak to that and in any of the numbers that you're seeing.
You probably see it a lot more clearly on the ground. I think we don't have a lot of statistics or any statistics really that to look at, rental listings versus how many tenants.
An interesting stat if you could ever put it together, because you would be the advertising history, but pulling all that out in the data might be one for the future to understand. Yeah.
Yeah, well, we can see the vacancy rate for rentals is definitely rising. So we've got I'm looking at the vacancy rate data here now. I know this doesn't really work too well for a podcast, a graph that I'm looking at, but the vacancy rate's at 1.2% in Perth. So it's up from like 0.5% a year and a half ago. To give you some context, the long run average in Perth for vacancy rate, this is the pre-pandemic 5-year average, which arguably is a pretty low benchmark given how weak the market was pre-pandemic. But the vacancy rate prior to the pandemic was averaging at about 6%, 5.8%. So yeah, it's still remarkably low. And I think the fact that we're seeing rental growth slowing at a time when vacancy rates are still so tight is really just a reflection of that affordability constraint, putting a ceiling on rental growth to some extent.
Have you sort of mapped out and correlated what vacancy rate typically goes with prices stabilizing and prices increasing? What sort of benchmarks have you used? Because I know I've got my own, but I'd love to hear it from the data experts.
Well, normally we'd be applying that sort of previous 5-year average, or in this case, a pre-pandemic 5-year average. I don't think that's the best measure in Perth to be looking at, given the rental market was pretty weak in that 5 years prior to the pandemic. But typically, a good rule of thumb would be when you have vacancy rates that are sort of around 2.5 to 3.5%, that's pretty normal. So to see vacancy rates down around less than 1%, they don't really get tighter than that. There's always going to be some level of churn in the market. So you won't get a 0% vacancy rate, kind of like we'll never see a 0% unemployment rate. At 1.5%, that's probably about half of what you might describe as a normal vacancy rate, I think. So yeah, it's still pretty tight. But I think you'll probably find vacancy rates do rise a little bit further from here, just on the backdrop of that restructuring of demand and less overseas migration coming through.
So how do we fare compared to the other capitals? Because if you're an investor, and we've got a lot of East Coast investors that listen to the podcast as well, and everyone's asking themselves, where do they buy now? Where do they buy over the next year? Give us a bit of a taste for that comparison of how Perth sits to the other capitals now.
Yeah, so as I mentioned, it's kind of middle of the pack for affordability. So we've got a median value in Perth, a median dwelling value in Perth, about $804,000. Adelaide's actually got a slightly higher median, $809,000, which I think just tells us two things. I think Adelaide is actually overvalued and looking like a pretty risky market to me now that we're seeing negative interstate migration and extreme unaffordability. But you've also got to allow for local incomes as well. Perth tends to have relatively high household incomes. So when you blend the typical price or the median price with the median income, still kind of middle of the pack affordability. If you look at growth rates for housing values, Perth is still leading the nation. We talked about that a bit earlier on, so 23% growth over the past 12 months. At the other end of the spectrum, you've got a market like Melbourne that's down about 2% in value over the past 12 months. Sydney's up about 4% over the year, but the last couple of months it started to just nudge a little bit lower in value as it starts to, I think, enter into what's going to be a fairly shallow downturn, with a downturn nonetheless. Brisbane as well, I think I quite often put Brisbane and Perth in the same sort of basket, being the kind of mid-sized capitals, but still a reasonably diverse economic environments, even though Perth arguably still more heavily skewed towards the resources sector. But both markets have very strong rates of interstate migration, and it looks like that's sort of settling at above average levels. So I think my pick for the medium term in terms of growth prospects will probably be those two cities, Perth and Brisbane. And Southeast Queensland more broadly, of course, has a lot of infrastructure development underway, partly preparing for the Olympics in 2032, but also like a lot of other states, just part of a big infrastructure spend that's going on. And you could say the same thing about Perth with a lot of major projects underway.
We were lucky to receive a lot of that submarine Henderson area submarine projects, so that was a big win for us here.
Yeah, I mean, big capital investment projects like that go a long way to creating jobs. And you go back to the big gas refineries being built to the northwest, and same sort of effect. As you sort of build these facilities, you generally have a rule of thumb of 4 people to build it, one person to operate it, type thing. So leading into it is a really big capital investment. And you generally find that capital investment like that works hand in hand with property values and housing demand.
And what are you seeing sort of dwelling approval wise, I guess, in Perth and potentially around the country? Because, we've got this big crisis that governments are trying to solve, and I've sort of done different deep dives into our building bottleneck here and can't sort of see too much change on the horizon. But I'd love to get your thoughts on this big complex problem.
It is a big problem, absolutely. So, the nation's working towards this stretch target of 1.2 million well-located homes by 2029. We're nearly 6 months into that time frame now, and from less than a standing start. So I think everybody acknowledges this is absolutely a stretch target. You could probably describe it as unachievable. The government should be applauded to have a target up here, right? And if we're close to it, been great. But Perth is bucking the trend a little bit on the approvals data. If you look at the national approvals data, it's really clear we're starting to see a bit of a pickup in house approvals now. Definitely not in the multi-unit sector, so apartments still pretty glum for approvals. But when you drill down into the national data and look at the state level data, what's really driving that uptick in house approvals is mostly WA, but also South Australia and Queensland. So it does look like the confidence in WA might be shining through a little bit. Maybe also the stronger price growth just helps to stack up a feasibility for developers and builders. So if I'm looking at building approvals or dwelling approvals now in WA, they're roughly around the 10-year average after being well below the 10-year average. And again, maybe the 10-year average is a low benchmark given prior to the pandemic, it was quite a sedate level of approvals underway. But yeah, there's a clear upwards trajectory in approvals across Perth. You can also see the commencements data. So kind of the construction cycle would start with an approval and then a dwelling commencement and then the construction work and ultimately a completion. There's also been a bit of an uptick in commencements. So I think we are starting to see the really early signs of a supply response coming through. And, it's going to take a long time to get through that backlog of undersupply that's accrued through the pandemic. But this is a good thing. It's a good thing from a social perspective, at least, that we need more supply in the marketplace, both rental supply and just traditional housing supply as well. And it's fair to say that when you look at the dwelling approvals data, there's still no real signs that Perth is starting to densify materially. Most of the construction activity historically and commencements going forward are still detached homes. So Perth does seem to have this love affair of urban sprawl going north and south, which you'd have to think ultimately is going to become really expensive for the state government to connect really far-flung areas of the metro, and they might start to place a little bit more emphasis on densification along the train line or around some of the major amenity nodes and precincts closer to the city.
Yeah, good point. And the finance and lending side, that usually sort of gives us a good feel for who's being active in terms of home buyers, first home buyers, investors, and where is that sort of activity going as far as Australia wide?
Yeah, I mean, we've been through an absolute investor boom nationally. We're seeing investors comprising about 38% of mortgage demand around the country. Long-term average would be about a third, so it's exploded by the average. Investors are represented, which doesn't really surprise me when you consider investors are generally motivated by capital gains, and they tend to follow the capital gains cycles, and that's exactly what's happened through this latest cycle. And you can see it as well in the really strong markets like WA. Investor credit growth in WA is up about 53% over the past 12 months. Spectacular. Owner-occupier credit growth is up about 32%. So it's still a really strong number for owner-occupiers. And a big part of that is first home buyers as well. So that's pretty healthy. But definitely a market cycle that seems to be led by an upswing in investment activity, which everyone's going to have their own views about that. Look at the Greens and this renewed debate around needed gearing or property tax reform. I think we'll probably see that debate and that discussion really start to ramp up next year if we're heading towards a federal election in May. I think you'll find that becomes a lot more vocal, particularly with the Greens holding more seats than they had back in 2019. And despite the Labor Party getting quite badly hurt in the 2019 election on a platform that was influenced by property tax reform, Yeah, I just wonder if they'll be a little bit more willing to consider it again with the backing of the Greens and maybe some new ideas.
Hopefully, both parties put their policies out before the election and actually let voters know, what they're in for. There does still seem a bit of a reluctance to touch negative gearing, especially when different states have done things that have hurt investors over the last sort of 2 years, and Queensland was classic with its land tax for investors, and I know Melbourne, Victoria now has put land tax up, and that's hurting their investor sort of demand as well. And then, of course, we've had the Residential Tenancies Act changes, and Perth's been relatively got off fairly scot free for investors because we haven't messed with our Residential Tenancies Act too great. We haven't had any land tax changes, and we haven't had any other real big changes to rock the boat. How are you sort of seeing those policies play out in the different states, and what might happen ahead?
Yeah, I think they're really influential on investor appetite. And using Victoria as probably the worst case example, you've got a state that has generally the highest stamp duty rates for starters. So that's already a bit of a disincentive and a barrier to transact. You've, as you mentioned, Jared, you've got this new land tax environment where they've substantially lowered the land tax thresholds down to just above 50,000. So a lot more people are paying land tax. If you're holding a very expensive rental property that might be, say, a holiday home on the Mornington Peninsula or something like that, for a lot of people, just the land tax is way too high to hold that property. So I think that's part of the reason why seeing a lot of investors are selling out of Melbourne and looking for greener pastures. And then on the tenancy reform, part of the tenancy reform, yeah, fair enough. Tenants need a minimum standard and probably some level of flexibility in their tenancy. But you can understand from a landlord's point of view, they have lost a lot of control and it's become more expensive to hold an investment property being a landlord. You've got other things like minimum standards for emissions and air conditioning and all this sort of stuff. Yeah, yeah, and then you can't say no to pets and no grounds eviction rules, and there's a whole raft of changes that have happened. So when you add that together with some of the other disincentives, like back in 2017, they had the new rulings around less opportunities to depreciate, not claim travel expenses, then higher taxes as well. Yeah, so there is this, I guess, growing level of, I think, just distrust in the changing playing field for investors that might be disincentivizing them or just pushing their demand towards markets where it's easier to invest and maybe lower costs, like WA.
Well, I shared some of your team's research in this week's episode where it looked like, at least Australia wide, there is more investors buying than there is selling at the moment. And that was surprising on the backdrop of all these negative things that you've just sort of said. And in Perth, particularly, it was good to see that since October 23, we've had a lot more investors buying than there is selling. So that's adding to our rental pool. But yeah, that was really interesting research that you guys released.
Yeah, it was a colleague, Eliza Owen, put that together, and the full report's on the CoreLogic website if anybody wants to have a look. But yeah, it was simply just looking at what does investor finance look like, and how much is that growing, and what are we seeing in terms of investors listing their properties as well. Every state, apart from Victoria, was seeing that trend you were just talking about, Jared, where there was definitely more investors coming into the market than selling out of the market. Apart from Victoria, I think that probably speaks a lot to just the taxation changes they've seen in that market and probably just the better prospects for capital gains outside of Victoria.
And finally, for your outlook for the year ahead, I know everyone keeps talking about, when will they reduce interest rates? What impact might that have on the market? How do you sort of see those factors coming in to affect things?
Yeah, it's always a complex environment, and intentionally we try not to do any forecasting because I think it
Parents get it right. You're always going to be times you don't want to be another one that does.
I mean, your forecasts are going to be wrong. It's just how much it's going to be wrong by. I mean, the general consensus, and I agree with this, is that next year will be softer than this year in terms of value growth, or at least the macro perspective. But I'd say the same thing about Perth. I'd be very surprised if Perth could maintain an annual growth rate, say above 15%, but probably more realistically, it's going to be below 10%. I'd say coming into next year. I mean, that's still a pretty healthy and a pretty strong growth rate, but it's well below what we've been seeing over the past few years. And the reason I think it's going to be lower is simply because even though affordability is not too much of a challenge now, if we continue to see prices rising so quickly, it won't take long for affordability to just erode the demand that we're seeing at the moment. We can also expect there's going to be less overseas migration. Interstate migration looks to have settled quite a strong level. That is, as we see less overseas migration, that means less rental demand coming through and probably less overflow from rental markets into purchasing activity as well. And then to your point, there's also the complexity of the macro environment. It looks like interest rates could be in the situation of being higher for longer. Now we're seeing a couple of the big four banks now pushing out the forecast for the first rate cut to May of next year, two still holding on to February. Financial markets are even more bearish, thinking it might be as late as September that we see rates coming down. Personally, my view is probably leaning more towards that sort of first half of the year cap, maybe not February, given how strong labor markets have been and inflation still looking pretty challenging when you look at the monthly inflation indicator that came out just recently. Absolutely coming down, the core inflation still looking not quite as coming down as rapidly as what the RBA was hoping for. So I think that combined with just really tight labor markets and not loosening as much as they were hoping for, still some wages growth. Yeah, it looks to me like the first rate cut's probably going to be after February now, unfortunately.
Well, it'll be an exciting and interesting year ahead, regardless, I think,
It always is.
with the election, with interest rates, with everything else that's happening.
We haven't even talked about Trump yet.
Well, let's leave him out of the show, actually. But thank you so much for your time. Hope you have an awesome Christmas period ahead and get out on your boat, like you mentioned. And hopefully we can have you back sometime again in the future, Tim.
Can't wait, Jared, for both the fishing and seeing up next time. Cheers, mate.
Thanks, mate.